So you've been thinking about becoming a loan officer and you're trying to figure out if now is a good time for you to pull the trigger and finally get into the market. If you're trying to figure it out, this might be a good video for you to watch. Recently, I think now more than ever, I've been getting a lot of requests from different people reaching out to me asking me, Zevi, what do you think about me coming into the mortgage market today? Would you consider hiring me? Would you consider training me? I do have some content on YouTube and a lot of people have been watching some free trainings and thinking, you know what, I could probably do this. This would be something that I could take advantage of and I could make some of these commissions. So I feel like we should talk about this. And if you're trying to figure it out, then this might be a great video for you to watch. If you don't know who I am, my name is Zevi Shafran. I'm an owner of a company called Loanbrook. We're a wholesale mortgage company in Los Angeles, California. So with that, let's get started. Let's dive in. And let me tell you, from where I'm sitting, how I would feel about coming into the market today as a mortgage loan originator. All right, so let's get started. I would have to say that I've been on both sides of the fence. Actually as a real estate agent originally, and then eventually I became a mortgage broker. And then ultimately, I developed other skills, which include brokering private money deals and commercial lending. We could talk about that a little bit later. But a lot of the requests I get are coming from people who are in the real estate field. And they're wondering, you know what? I got this license, not really doing a whole lot with it. It's not really active. Is there a better opportunity for me on the lending side? I would say that in my personal opinion, there is a lot more opportunity on the lending side simply because real estate is very restricted and extremely saturated. I mean, there's over 120,000 real estate licensees only in Los Angeles. That's crazy. And I can tell you this, contrary to that, I believe almost 40% of people holding NMLS licenses didn't renew their license. So you see that both sides are actually feeling the pain of where the inventory is today, where the interest rates are today. However, mind you, in a lending environment, typically, a healthy market would mean that you have a flow of both refinances and purchases. Now, in today's market, you don't really see a whole lot of refis. I mean, sure they exist, but there's just not a whole lot of them. So the primary transaction is based around purchases. And I gotta tell you, as a real estate agent, I mean, man, it's extremely difficult. And if I had to pick a side, I would 100% want to be on the lending side than I would want to be on the residential side, simply because you need foot soldiers. And I'm going to get into some things here in a minute. Foot soldiers meaning you got to have people that are willing to send you business outside of end users. And you can do that in the mortgage space by having, as an example, a loan officer relationship to a referral partner like a real estate agent. You don't have that available as a real estate agent. You got to go knock on a door to get that final client to either list or sell their home, or a buyer, right, to take around. Now, it's slightly more challenging with the NAR lawsuit where, there's a different structure to how the actual selling agent, which is the agent representing the buyer, is going to get paid. So you gotta have to think about that. I think it comes down to the most important thing, which is demand. All right. Where would you think there's more demand? On the lending side or the real estate side? That's really what it comes down to. But you have to ask yourself another question, knowing that the majority of the transactions are going to be purchases, where do you think the business is going to be coming from? It's going to be coming from real estate agents. And so that means that as a lender, as a mortgage loan officer, you have to build these relationships with the real estate agents. And I got to tell you, in my opinion, in today's market, because there's such little inventory, people are very particular. I would imagine that just like I just told you that close to 40% of loan officers did not renew their NMLS license, I think it was in the upper 30s, that means that the people that are actually selling homes are a lot more sophisticated too, right? So that means they have pre-existing relationships with lenders that they already trust. So to kind of crack into that market, I feel like it would be slightly more difficult as a newbie. It's not impossible. It just means that you got to talk to a whole lot of people, be super friendly, and hope that somebody opens a door for you and gives you the opportunity. So I think the next question we have to ask ourselves is this a short-term play or a long-term play? Meaning, are you looking to be a loan officer for the next year or two, or for the next 2 to 5, or for the next 5 to 10 years, And I think that's a really important question because when you zoom out and you kind of look at how the landscape of lending has been over the past 10 years, I think it's fair to say the past 20 years, people have done really well with it. Okay, but these people have been in it for a very long time. we know that from 2019, 2020 to 2022, where people were just giving money away, all salespeople came into selling mortgages simply because it was the thing to do. It didn't mean that they were real loan officers. It was just an opportunity, right? So that's not the type of person that I would say is indicative of somebody who is going to come into this business and basically build a career out of it. So you have to ask yourself, is this a short-term play or a long-term play? Because if it's a long-term play, then maybe you can write off or write out the next couple years. Because in my opinion, right now, we are in August 2024. I believe that over the next 2 to 3 years, rates are going to taper. I believe they're going to go lower. And if I had to guess, I'd guess probably in the mid fives. And that would probably make the market a lot more normal than it typically is. I don't think right now the market's normal at all, to the point where you'd start seeing some flow of transactions and then the business would standardize again. So if you're in that type of mentality, then I think there's a definite opportunity for you to take advantage of learning the business. Now, one other question you really have to ask yourself is, if you're coming into this short or long-term play, is this going to be a full-time or part-time type of a transition? And the reason I say that is because you're going to be substituting some portion of your income, or maybe you're not. Maybe you're supplementing it. Maybe the whole point is to supplement your income. And so you got to ask yourself, how much time do I have to put into this today to be able to supplement the amount of income that I need, and then break it down per deal and then figure out, okay, I can tell you that an average commission for a loan officer is typically between 1% to 2%. Now, mind you, there's a commission split with the house. So if somebody's working with the house and say their commission split is 70-30, not abnormal, that means they're giving away 30% of their commission. So figure out, depending on which market you're in. I'm in Los Angeles, so typical deal over here, I would say typical loan amount is probably going to hover somewhere between 600,000 to 800,000, and that's, I would say, on the higher side than where it probably is in the rest of the nation, depending on where you are. So if your typical loan amount is 300 to 400, you're making 1.5 points, is $6,000, right? You're giving away 30%. It's about $2,000. You're left with $4,000. Do the math. Figure out how much you actually need to substitute or supplement to know if this makes sense to you. Now, my last bucket on my list is there a better opportunity, in my opinion, than what we've been discussing here, or a supplement opportunity, something that would just make this just a little bit better during today's date? And in my opinion, the answer is absolutely yes. And you might want to know about this, and maybe that's why you're watching this video. And so let me walk you through that. I started as a residential loan officer, and I didn't know much about commercial or private money lending. So this was the path that I took naturally, and I became quite good at it, and it actually worked out really well for me because of the way the market has been over the past 10 years. However, if I was to transition into the mortgage industry today, I might take a different path. And the path is of commercial lending versus residential lending, business lending versus residential lending. The reason I say that is because when we look at residential lending, the reason there's a bottleneck there is because most of the mortgages are lined up for 30 years, right? So people have locked up interest rates anywhere between 2 to 4%, quite a majority of the nation, for a period of 30 years. So like I told you before, a healthy flow of business is both purchases and refis. We're not seeing much refis because all those have been locked up at much lower interest rates. So how could I bypass that on a commercial product or a loan, right? Well, it's because most of the commercial products are lined up for 3, 5, and 7 years for the most part. Sure, there's longer terms available, but for the most part, it's 3, 5, and 7 years, and they expire. That means that no matter where the market is, the seller of the property either has to sell the property or refinance the asset. Does that create a bigger opportunity for me? Heck yeah. Bigger opportunity than residential lending, that's for sure, because half of the product is going to be opened up and I'm going to have the opportunity to refinance it. So the next question I'm going to ask myself is it a lot harder to do? And the answer is no. It's actually, in my opinion, a lot simpler to do. There's less red tape. You're not dealing with all the compliance of an owner-occupied transaction, and it's a lot more black and white. And so that's great. What about the loan amounts? Well, when I'm doing commercial lending as opposed to residential lending, the loan amounts naturally are larger. So think about this for a second. I'm in Los Angeles. For me to be able to compete as a loan officer for some of the commercial loans that I'm able to originate, I would have to be selling ultra high-end properties or lending on them, right? So that means that you got to be one of those agents who works on like Sunset Boulevard or one of those shows like Selling Sunset. Well, you could, or you could just originate commercial business and lend on commercial business, and then you just raised the bar in terms of the loan amount that you typically lend on, which naturally means that if your average commission is 1 to 2%, depending on the deal, you're able to make a lot more money. So does that create a better environment? Yeah, I think it totally does. And then at the end of the day, there is something called private money lending or hard money lending. And that's available too in the commercial space, just like it is in the residential space, but especially in the commercial space because it's a lot more lucrative. There is other things associated, which we don't need to get into in this particular video, but you might have just one question. Okay, Zevi, all sounds great. How would I learn how to do that? Well, I got to tell you this. For me, I've spent literally 10 years learning how to do this. And over the past year, I've actually taken my knowledge and I packaged it into what I call the part-time Commercial Lender Academy. And I specifically called it part-time because somebody like you who might be thinking about taking this journey might be able to come in, do this part-time, learn everything about it, and decide if this is in fact something they'd be interested in. If it was, mind you, commercial lending does not require an MLS license. All you need is a real estate license. The licensing piece is a lot simpler in the commercial space because you don't need an MLS license. It's also cheaper because you don't have to renew it every year. Definitely something to think about. So if you've been thinking about getting into lending in any capacity in 2024, I personally think because of everything we've described in this video, I would highly consider taking a good look at commercial lending. And if you feel like you want to learn more about it, in the description of this video, I'm going to place the link to the Part-Time Commercial Lender Academy. You can check it out, see what it's all about. If you have questions about any of this, just drop them in the comments below. I'll be happy to go through them with you. Here to help. I've gone through this. I know it could be challenging. I'm sure, there's a very large audience of people who have the real estate license trying to figure out what to do with it. With just a real estate license in today's world, you could originate commercial loans. That's really all you need. You do have to put it under a broker shop who originates commercial loan. And if you don't know one, welcome to Loanbrook. With that, I appreciate you being here. Thank you for watching this. If you have any questions, like I said, drop them in the comments below. Otherwise, if you've enjoyed this video, please hit the like button so other people like yourself on the web who are looking for this type of information can find it. If you want to see more videos like this, please subscribe to my channel. Otherwise, thanks for watching, and I'll see you again on the next video. Take care.